right, today is February 8th, 2024, and we're looking at the S&P 500 futures. And so yesterday we had a pretty historic day. ES went above 5,000 and SPX got almost there by a few cents to 5,000. So we have for today, we are opening inside yesterday's range on that top upper distribution. So we had this spike during the overnight session that left a gap, that left single prints, and now we're accepting prices at this level, right? So this is showing us that the bulls are still in control, the buyers are still in control, accepting prices higher. So we want to keep an eye on this this previous week's high and this single prints. We haven't really retested the 5,000 level from the above, so I think we need to do that. I'm not saying it's gonna happen, but that's something that it will be healthy for the market to retest this level and then see if we're accepting. If we don't have, if there's no attempt to retest this, that's a sign that the bulls are very in control, that there's no sellers yet. And you gotta keep in mind that when we're making new highs, longer term traders, they're like, I'm not gonna sell this, right? Like, it's gonna keep moving higher. And the funds that are like, they have these like 2050 targets, 2040 targets, 2060 targets, right? Like, they're just holding, right? They're like, I'm not selling this. So if you try shorting this, you're gonna be shorting against people that are holding and for long term, right? So until we don't see clear signs of rejecting higher prices, this is a long exploration of higher prices. We are one time firming up in the monthly, in the weekly, in the daily. So in my opinion, there's no such thing as overbought, oversold. The market is pricing what everybody agrees the price is, period. So if everybody agrees that this is a fair price, they're gonna keep transacting higher until they don't. Okay, so having said that, for today's session, I'm gonna look for the reaction here at the 5,000. Do we retest it and then go back up to this to yesterday's point of control and yesterday's close at 50.15, or do we get into this spike and attempt to close the gap? If we close the gap is at 49.7825. Sorry, this is an old level. Actually, I'm gonna leave it there because we haven't tested it and now I lost it. Okay. Never mind. So anyway, so if we close the gap, then we're gonna be trading in this distribution. So I would expect this 49.67 to be tested, and there's a low volume area which held pretty nicely a couple of days ago, which is January high. But this distribution is all the way here until the 49.36 area. So if we come back into here, then I would look for all this area with a little bit of support here at 49.56. If we hold this area, I would be looking for a break above this to repair this P-shaped profile that's lacking access to the upside, and I'll be looking for the 50.32 level, and possibly a little higher. If you project this and make it balanced, it will be around 50.40, 50.45. But that is my ultimate target, the 50.32. NQ, let me pull up NQ. NQ is similar, but NQ cleaned up some of the single prints already, so it's holding also above the spike, above the previous highs, swing high, and also left this low volume area, so I'll be looking at this 17,800. If we keep moving higher with NQ, I would look for the 18,000, very nice round level, and any move back below this area, if we hold 17,780, I'm gonna look for 17,700, which is that 20-day point of control. And of course, if we keep it going lower, travel back to the other side of the range, which is at 17,520. Okay, I'm gonna show Crude since, let me see if I can even show it, because I don't have it set up to show here, but see if I can do this. Yeah, there you go. Okay, this chart is a little messy, but basically we have a low, we have two distributions, right? We have this one right here, and we have this one right here. So 75.40 is a low volume area on Crude, and if we are able to trade above this area, then I will be looking for 76.80, and then a travel back to this area, to the 200 moving average at 77.30s, more or less. But if we stay here, I'm noticing like this in this morning session, a lot of volume in this level, 74. 70-ish area. So to me, this means that it's getting ready to break above this, accepting this higher prices. Usually we had been trading in this range, but now this morning this has been like a lot of volume here. So watch this. If we stay around this area above the 20-day moving average, then I will look for a break of this low volume area into the 76.80s. We're in a seasonally speaking, we're in a bullish season, I guess, for oil, and into I think mid March. I can't remember exactly until when, but this seasonality speaking, oil is bullish. All right, good luck. Oh, news, economic news. Let's see what we have for today. Economic news. We already had the jobless claims, and we have Yellen speaking at 9. She's probably speaking right now. Wholesale inventories at 10. Let's see. We have the 4-week bill auction, and we have the 30-year bond auction at 1 p.m. and Fed speaking at 12:05. So similar to the previous days, the bond auctions are usually lately we've been seeing a lot of flows ahead of the auction. I'm not an expert on this, but some traders that know more than me have told me that the banks are they're kind of forced to participate in all these auctions and provide liquidity. I'm not sure exactly how that works, but they do. You can see lots of hedging flows before, like an hour before the auction, and then a big move after. So keep that in mind if you're day trading. And that's it. Good luck.